Hey guys, Fred Passelli here. So what I want to talk about briefly today is IRS audit rates by entity structure. Pretty much go over the likelihood of you getting audited depending on the tax return you're filing and your entity structure. So the first one I want to talk about real quick is the W-2 standard 1040 tax return. This is a very low likelihood of getting audited. So this is for individuals that just work a W-2 9-to-5 job. They don't have a business. They might have some rental income. They might have some investment income. They might have some equities, etc. This is basically the standard tax return. Those audit rates right now are looking at about 0.1 and 0.4%. So between those rates is what you're likely to get audited. So that's pretty low. It's about 1 in 1,000 or 4 in 1,000. So you have a pretty low audit rate if you are a standard 1040 W-2 taxpayer. So the next one I want to talk about is probably the most audited entity structure, and that's going to be the normal LLC sole proprietor. So this is an individual that basically has an LLC, but they're not taxed as an S-Corp or partnership. And they do a 1040 tax return, but they use a Schedule C to report their income. The Schedule C 1040 combination has about a 2 to 4% audit rate. That might sound low, but in audit rate perspectives, that's pretty high. So 2 out of 100 tax returns or 4 out of 100 tax returns are going to get audited for the standard 1040 Schedule C tax return. Then the third type of tax returns, probably the least likely to get audited as of today's data, is going to be partnerships and S-Corps. Both flow through entity structures. Those have a 0.1 to 0.2% audit rate. And that's really due to basically not having enough revenue agents to be able to do those more complex audits of the S-Corps and partnerships. Something to note about all these types that we've mentioned so far, the 1040 W-2, the 1040 Schedule C, the partnership and S-Corp, and even the next one I'm going to talk about, the C-Corp, these rates will go up significantly once you pass about $500,000 in total income. And then it will go up again even more once you pass 10 million. So something to note with the IRS, a lot of their resources are really spent on the 10 million plus range. So that's really where most auditors at the IRS or revenue agents are spending their time. Now, the fourth and final one I'm going to cover is the C-Corp. This audit rate is going to be very similar to the S-Corp and partnership. It is about 0.4 or 0.5%. So that is 5 out of 1,000 tax returns would be audited if you're doing a C-Corp. C-Corps are going to be normally the bigger entities, large private companies or large publicly traded companies. Sometimes there might be standard C-Corps, but something to note, you might hear about C-Corps getting audited a lot because they reach that $10 million revenue threshold. So those are really the audit rates, what we're looking at as of 2026. I would, don't base your entity structure off of audit rates, but definitely take note of the ones that have a bit lower. And also the 1040 Schedule C technically does have the highest out of all the audit rates. So, if you're doing everything like you should, you have a bookkeeper, you have a CPA, you're taking track of all your deductions, you should be fine. But as it stands, that's what the data is showing as of today.